Well, welcome again to another edition of Financial Friday. I'm Jim Tabor, and we're continuing our talk with Kfcu Federal Credit Union, as they are our special sponsor of Financial Fridays here on WLOX and Shop South Mississippi. And we're continuing today our series with Tom Quinn, who is the Director of Mortgage Sales with Kfcu Federal Credit Union. Tom, pleasure to see you
Jim,
again.
good to see you.
Great information last week, and if you didn't tune in last week and catch that, we talked a lot about first-time home buyers and everything that you need to be aware of. Of course, you can go to our Facebook page and find out and get and watch it again if you didn't get it. Today, we're going to talk about home equity. First off, what is home equity?
So home equity is the value that you have in your home against what you actually owe against it. The good thing for South Mississippi is this is a hot topic of conversation around the nation. During COVID, home values skyrocketed. A lot was because everyone was purchasing homes. There were lower interest rates. There was a lot of cash offers on these homes when people were moving around. It inflated home values. Mm-hmm. On your coastal parts of the United States, home values are decreasing, but around South Mississippi and our 4 coastal counties, they're basically only gone down about 2%. So there's a whole lot of equity built in a lot of the homes here in South Mississippi. So, for example, you may have an interest rate that is fair. And fair is depending on what you deem it to be. But maybe you have some high interest credit cards that you want to clear. And you can consolidate all of that into one payment at a rate that makes a whole lot of sense. We're looking at credit card rates shooting up to 25–30%. We're going to have a lot of people struggling to pay the grocery bill. That's something where you could tap into your home equity and consolidate all that debt. Or maybe you secure in your home and you want to build the pool or build the deck, and you're going to stay in that home for a long period of time. You can tap into your equity to fund those projects. And there's different ways that we can go about tapping into that equity that makes the most sense for you.
So what kind of loan options do I have to access my equity?
So your two main choices is a traditional cash out refinance, or as some people refer to it as a home equity loan. It's a fixed rate. Basically, we look at different loan to value, which is what you owe versus what the home's worth, and we can tier that up, and you can pull it out, get that cash at 3 days after closing, and it's a fixed interest rate, and then you can do what you want to do. Clear debt, do your home repairs, whatever. Or you could get a home equity line of credit, which is different. It's basically kind of like a credit card, if you will, on your home itself. We take that value, and you get a line. And you can take draws off that line, repay that line and build it back up, and use it as you want for a 5-year draw period at Kfcu. After that, it locks into place, and you repay over the next 15 years for that term of the loan.
How would I know which option would be best for me, though?
That's our job. So you would come in and we would
I need this money for this, please. What can you do for me?
We'd have you come in and we'd try to get a read on what you were trying to accomplish.
Right.
Because debt consolidation, you could use both products for debt consolidation, but if you were on a fixed income, maybe you're on Social Security, I don't want to put you in something adjustable where, especially, the prime interest rate was something that was steady. Over the past year and a half, we've seen that rise drastically. You maybe not want to go down the adjustable rate route on a home equity line of credit if you're on fixed income. That way you don't have to come back and say, hey, I'm kind of in an emergency. However, sometimes it makes sense. It really depends on what you're trying to achieve, and it's ultimately your decision. We're just going to try to guide you in the right direction on what makes the most sense for your project. A lot of the times, home improvement projects, they need that line of credit because they don't exactly know how much it's going to cost. Building costs, contracting costs are changing daily. So they tend to go to more the line of credit. Debt consolidation tends to trend more into a cash out refinance.
What kind of costs are associated with this type of loan?
Very similar to a purchase. Lenders are still going to have a certain charge to do the loan itself. Your closing attorney, if you do a cash out refinance, a home equity loan, it has to be closed with a closing attorney again, so you're going to incur those fees. Your insurance, it's not like you're buying a new premium, but if you're required to escrow in, we're going to build back your escrow account. So there's certain costs. It's less than your upfront cost on a purchase, but there will be some costs. With our home equity lines of credit at Kfcu, there's actually no cost to do it. There's no prepayment penalty to do it. We do a very simple appraisal process. It's very streamlined, and it costs you nothing.
How long does it usually take to build up some equity in your home?
Depends on how much you put down to start and how long you've been in the home, and then where your value is now. Some areas on the Gulf Coast have had a drastic increase in home values. If you put down minimal when you purchased, if you haven't been in the home for a long period of time, you might not have that much equity to tap into, but you might have something. Mm-hmm. We'll get an appraisal, we'll look at it and kind of tell you what you can access out of it.
And I imagine this time of the year, a lot of people are looking at the pools and the decks and new fences, things like that.
Because they're looking at, especially if you're looking at a pool, for example, you can finance your pool through one of the companies, but the rate might be beneficial to you. The rate sensitivity is the hot topic in the refinance industry right now. Everyone got those low interest rates, and so they're scared to tap into it now. So that's where it's kind of stalled at the moment.
So it's better to would be better to come to you and see what they can get through their equity instead of pay the pool company cash.
Correct. It depends, but we'll take a look at everything. Our main goal is trying to help out each and every member that comes in and look out for their best interests.
Can I pay off my my home equity loan early?
Sure can. You sure can. If it's a cash out refinance home equity loan, there's no prepayment penalty. On our line of credit, there's no prepayment penalty either.
And how long does it take to tap into the equity of my home?
In that process, it's shorter than it would be a purchase, because a lot of times there's less factors. A cash out refinance, we're averaging about 26 days, 28 days. On a home equity line of credit, we can get that done in as little as 12 to 14 days.
Wow. So make them pool plans.
Invite me too.
Hey, I'm all for that. I'm all for that. So there's a lot of, I'm sure there's going to be a lot of questions regarding, again, how do I find out how much equity I have in my home? What kind of options did I have? And you said, if you would, while we got a couple minutes left, the two options as far as getting a home equity loan.
Right. So the process of it, when you come in, a lot of people will search online. There's a lot of websites like Zillow and Realtor.com. They'll give you a rough estimate of what your home is. And to be fair to them, a good portion of the time they're close. They're not accurate, but they're in ballpark. What we do is, if your home requires a full appraisal, we'll send an appraiser out there, totally third party. We'll go out and get that value of your home and let you know what it's worth. And then we'll look at what you owe and determine what we can do. On a home equity line of credit, depending on the amount that you're trying to finance, we may do what we call an AVM, which is it's a model that we use so that we can do an appraisal right from our desktop. And it'll give us a pretty accurate value. If you don't like the value, then we can send out an appraiser to confirm what we pulled. But it's a pretty streamlined process. The industry's kind of slowed down a little bit, so appraisers are moving much more quickly, I should say. So that's great. So the turn times on that have come down drastically. So.
All right. Well, thank you. Tom Quinn, Director of Mortgage Sales, Keysler Federal Credit Union.
Thank you so much.
Thank you again for the information for the last couple of weeks on buying a new home, or buying a new home for yourself, whether it's a new home or it's one that's already been lived in for a while that you got your eye on, or that new pool for that equity.
Yeah.
Anyway, thank you again for joining us, and we'll see you again next week for Financial Friday.